Hey everybody, how's it going? Today I want to go over something really strange that's happening with a different broker, that is eToro. eToro appears to be adding stop losses to people's stock without asking them and without their consent, which is very strange. So for those of you who are uninitiated when it comes to investing, a stop loss is a type of trade where you tell your broker, if the stock goes below this point, sell. So let's say I buy a stock at $20 and I'm really lucky. The stock goes all the way up to $40. I've doubled my money and I'm holding it. But I don't want to be greedy. I've made this much off of it. I don't want to be greedy and get stuck if it goes all the way back to 20 or 10 or $0. So I set a stop loss. So while the stock is still at $40, I set a stop loss at 30. That means if the stock goes back down to 30, the moment it hits 30, it will sell for whatever price it is that my broker is able to get at that time. So this way, if it goes back down at $10 or $5 later in the day after I bought in at 20, I'm not stuck holding a bag. A stop loss is an automated sell that occurs once it hits a certain price that you specify. Key word here, you specify, not your broker. Now, what is weird here is that it appears eToro is adding stop losses to people's orders, and it seems like some people have been saying around 20% below whatever their price was that they bought in with it. So this person says, eToro set a stop loss for me and won't let me change it. How is this legal? You own the underlying asset. They can't force you to sell. It looks like they are selling CFDs, which is not the underlying asset. I owned underlying assets and they were forced closed. It was a new position. I bought last week and I don't have stop loss active. They implemented it today. Any new positions you add today automatically have a stop loss, and they don't even notify you of it, and you can't remove it. Someone said you can remove it. You need to put up another 100% collateral completely to remove the stop loss, which is stupid. So what I read this to mean, and please do tell me if this is incorrect here, the way I'm interpreting this is, let's say that I have $600 of a stock in my account. They are going to set a stop loss for me unless I add $600 of cash into my account in addition to the $600 worth of shares in my account. That's weird. That's strange. That's a strange thing to have happen. I have not heard of this happening with any other broker so far. And I've been getting a lot of messages from people that have been saying that this is something that is happening with eToro. So someone said over here that they were forced into closing on a 20% stop loss on new purchases about an hour after the market opened. They closed 4 of my trades costing $1,000. Now, there are reasons to trade without a stop loss. The reason that people trade without a stop loss are because there are people out there that have larger balls that are not paper hands bitches the way that I am. So, for instance, let's just take a look at the chart on GameStop today. If we take a look at the chart on GameStop today, so it started off at $301, and then it dipped all the way down at $213. And then it went right back up afterwards to $265 and $244. Now, if you are someone like me that's a paper hands bitch and you had a stop loss, you probably got kicked out of the stock somewhere around here because it dumped. If you're not a paper hands bitch like me and you actually held it and you did not have a stop loss, you were better off for not having it because, an hour later, the stock went back up. Now, if this stock were to have continued falling, you would have been better off because you got a stop loss. So let's say that the stop loss that kicked me out today around $213 was placed, but the stock went down to $100 or $50. I would have been happy that the stop loss was in place because it would have kept me from losing more and more money. So whether or not a stop loss is a good trade is really going to be based on how the market went that day, and whether or not you're going to use one is going to be part of your personal trading strategy. But the key word there is your personal trading strategy, not your broker's. There are reasons that people have stop losses. This is all up to your personal risk tolerance, and this is also up to where you think the stock is going to go. I had a stop loss set because, as I've mentioned in many videos, I am a paper hands bitch with just about everything that I hold, and Erica frequently makes fun of me for it. But I set a stop loss out of an abundance of caution. I would rather get kicked out than be there to be a bag holder as it goes all the way down. That's my personal trading preference. Other people have different personal trading preferences, and it's really strange that the brokers are now starting to get involved with your personal trading preferences and tell you these things. This is really strange to me. I understand the reason that a broker would let you sell a stock but not buy a stock. That I understand. The reason that there was a lot of outrage over Robinhood allowing you to sell but not buy is because they lied to when they were speaking to CNBC News about the reasoning, and they had what I imagine they had a liquidity problem. So in this video, which I really do hope people watch, I try to sum up everything that was going on as succinctly as I could. I even left a timestamp in here to around 1830. In this video, I go over how the CEO of Robinhood lied on television and said, we don't have a liquidity problem, but they stopped allowing people to purchase the stocks because they had to put up a lot of collateral that they didn't have until they got $1 billion cash infusion.
Based on volatility in the markets, and they can be substantial in the current environment where there's a lot of volatility and a lot of concentrated activity in these names that have been going viral on social media. So we're really in unprecedented times, and in order to protect the firm and protect our customers, we had to limit buying in these stocks. And to be absolutely clear, Go ahead.
But it sounds to me, though, that you're suggesting that there was a liquidity problem inside the firm. And my question about that then raises all sorts of new questions about whether there's a systemic issue underneath the system and underneath the company unto itself.
No, there was no liquidity problem.
I'm kind of curious what eToro gives as their reason here. So I decided to check out eToro's website just to see if they, made any sort of blog post or something that was easily visible as to why it is they were taking this action that I have not heard of other traders taking part in or other brokers taking part in, and there's not really much I can see here. So I figured, there would be some sort of notice. Hey, by the way, we're setting stop losses on your trades. So I'm just, clicking on all the stuff in the About section, and there's really nothing here that is really communicating what it is that is going on. Or if they are communicating what's going on, it's fairly buried. So when I go to the In the News section, the last thing they have on their website for the In the News section is from May of 2020, which does not inspire confidence. Again, it's one thing if that's a blog, it's another when you have a news section. If you're going to have a news section and never update it, that's particularly strange. And I also, let's just take a look here and see if they have a Twitter account or anything like that, any sort of modern social media that would explain this. And when I check their social media, it says Google is responsible for Ford's growth. Wait, is this Satoshi? In the last few days, there have been a number of comments about the closure of positions. Okay, here we go. So now they finally released a blog post, but you have to go to their Twitter to find it because it's kind of buried on their website. And when you check out their blog post, it says, in the last few days, there have been a large number of comments on our feed around the closure of positions. We want to take this opportunity to clarify that it is never eToro's goal to close positions. As an online investment community, we exist to enable our users to participate in the capital markets. Manual positions on our platform are kept open as long as the requested take profit or stop loss rates are not reached in the market or a manual request is not made to close the position. As a regulated broker, we must always act in line with the regulations of the regions that which we operate and within the scope of what the market can offer. Some corporate events, such as delistings, and certain market events, such as contract rollovers, for example, on instruments like copper or China A50, may cause a position to close at the last traded rate. From time to time, there may also be extraordinary circumstances that will require positions to be closed or for trading limitations to be applied. These circumstances could include regulatory requirements, new laws or directives, and/or risk management decisions. Such events may come with advance notice, while others may not, but we will inform our users of any changes as soon as we can. We hope that this explanation is reassuring. We strive to provide the best service and investment experience for our clients. Now, they're saying that this is because of, this could be because of regulatory or risk or anything, but this does seem kind of like a copy-pasta-ish kind of answer. Again, I use Ameritrade, and I was not forced to put a stop loss on my position. I put a stop loss on my position as a choice that I made. It was a willful choice. Erica, on her brokerage account, does not have that. I did not have that. So it's really strange that eToro is doing this when other brokers are not. And I would really be curious if any of you have any insight into what the actual reason is rather than this copy-pasta-ish blog post. As I said in the video on Robinhood, this type of corporate-ish PR is really not going to work in the 2021 era, in this decade. I think people are kind of sick and tired of being patted on the head in that way. They want the truth. They want the real answers. Even if the real answer sucks, it is better than this. Now, when it came to Robinhood, again, As I put in this video, the issue with Robinhood wound up being that they did not have enough collateral to be able to allow people to purchase. That is a thing. And the reason that everybody thought it was bullshit is because the CEO of Robinhood never alluded to not having enough collateral. So he said on CNBC, we don't have a liquidity issue. But then he said, due to market volatility, we can't let you buy. I really hope that eToro doesn't repeat the mistakes of Robinhood. I don't think that the explanation that you see in this blog post is something that is going to satisfy people that have been forced out of their trades. I think it's particularly strange. And one of the things that I think is going to come out of this entire situation are a lot of people recognizing what brokers are the real brokers and what brokers are the brokers that they probably should stay away from. I'm happier to have had Ameritrade than for the people who have Robinhood. Ameritrade put considerably less limits than Robinhood. I think that they were only limiting options at some point, not actual shares, whereas Robinhood was limiting everything, and eToro is forcing people out of positions. I still think at this point that I may be better off with a broker like Fidelity, although I would like to do my own research prior to that. But I highly suggest that people do their own research regarding brokers at this point in time, and just don't assume in any way, shape, or form that your broker is not going to do weird shit like not be well enough capitalized to be able to allow you to purchase stock or randomly try to stop loss you out of a position. It's my opinion, and again, this is pure speculation based on someone who is a MacBook repair dude who is not working in finance, but it's my pure speculation that the reason that they're saying you need to have an amount of cash in your account that is similar to the stock that you have is because they have a money problem. Either that or that's my guess. That's the only thing I can imagine. But let me know what you think in the comments down below, because this is really, really strange.